Welcome to the world of finance, where every decision can shape your future.
That's right. Today we have expert insights from Jeremy Szafron, Rich Checkan, and David Lin.
From Bitcoin's wild price swings to outlooks on gold and silver, we cover it all.
Plus, we look at how central banks and geopolitical tensions can influence our portfolios.
Join us as we break down complex ideas into easy-to-understand summaries.
Stay tuned, because after this, we're diving into whether stocks are set up for a crash landing.
Just a quick reminder that this content is for educational purposes only and not investment advice. Could we be staring down the barrel of a market crash?
According to Rich Checkan, there are indicators we must scrutinize.
What does the data say about stock performance lately?
Let's dig into Chris's insights.
So, what's the core message here?
It's about managing expectations during an ongoing bullish trend.
Right? And the historical data is pretty telling, isn't it?
Absolutely. It often underscores the risks involved.
Chris highlights how drawdowns can be historically brutal.
Yes, the average retail investor is only up 3.7% this year.
Why is overtrading a concern in strong markets?
Because it can lead to significant underperformance.
How does today's market compare to the past?
Chris suggests it's healthier than during the tech bubble.
Encouraging to see economic indicators remain robust.
Definitely, but caution is still key.
How might these trends influence future investments?
Chris believes nimble strategies will be necessary.
What about the warning signs for potential crashes?
Those can be subtle until too late. Pay close attention.
So what's the takeaway for investors?
Stay alert and don't ignore the pullback risks.
That's sage advice for navigating the markets. Stay tuned for our next segment, where we'll explore China dumping record amounts of treasures, what they aren't telling you, featuring insights from a financial expert. Isn't it shocking how much U.S. Treasury China is dumping?
Yes, but what if I told you it isn't about politics?
Really, what's the real reason behind it?
Let's peel back the layers. It's all about dollars and global economics.
What's at the core of this massive sell-off?
It's really about the dollar. Its scarcity is driving these actions.
So it's less political drama, more financial strategy.
Exactly. Let's look at some compelling data.
These numbers are staggering. What do they tell us?
They signal serious shifts in reserve asset management, not disdain for the U.S.
And this is reminiscent of past trends.
Absolutely, this is cyclical and predictable.
Why do headlines link these actions to politics?
It sells stories, but real analyses show fundamental economic drivers.
So what's the actual story behind these sales?
It's all about risk aversion and market conditions.
What's the role of the Cayman Islands in all of this?
A critical player. Unexpected treasury influx points to underlying market issues.
So it's not just about who's selling, but where those treasuries are going.
Spot on. That tells us a deeper story.
Can we expect these patterns to continue?
Definitely, as dollar scarcity remains a critical issue.
What should investors do in this scenario?
Stay informed and be prepared to adjust strategies.
What's the bottom line for investors?
Adaptability and awareness of market forces are crucial.
And what's the future outlook?
Continue to monitor dollar liquidity and treasury flows.
If you're enjoying these insights, don't forget to subscribe.
Your support enables us to keep delivering timely economic analyses.
The recent approval for Ukraine to use U.S. missiles raises significant questions about nuclear escalation. What's the latest?
McGovern believes this decision marks a pivotal moment in the conflict, potentially inviting dire consequences.
What might those consequences entail?
Let's dive into his insights.
So what is McGovern's primary concern here?
He highlights that these missiles could be viewed as a direct attack on Russia, igniting war.
Does he think Putin will escalate further?
Likely not, but the situation remains precarious.
What does this updated doctrine mean for Ukraine's strategy?
It signifies a shift where any strike could invoke a severe response from Russia.
How do these long-range capabilities impact the battlefield?
McGovern argues they do little to alter the war's trajectory.
And what about North Korea's involvement? Is it significant?
McGovern suggests this could complicate U.S. relations with China even further.
Could this lead to an international military strategy shift?
It's possible. The dynamics are changing rapidly.
What does McGovern predict for the near future?
He foresees escalated military confrontations, both in Ukraine and beyond.
What evidence supports this view?
Current trends indicate a rising willingness to engage militarily.
To sum up, McGovern's insights urge caution and strategic diplomacy.
Indeed, the potential for escalation, is troubling.
What's the key takeaway?
Engagement and careful navigation of these tense situations are essential.
Up next, we dive into Peter Schiff's alarming predictions for America. Stay tuned. Peter Schiff paints a dire picture of the economy. What's going on?
He suggests we are facing a major economic crisis, not just a blip.
What leads him to this conclusion?
Let's analyze the factors he points out.
So what's Schiff's main thesis here?
He argues that perceived economic stability is masking severe inflation challenges.
Are we really at risk of stagflation?
Yes, and Schiff lays out why no one seems prepared for it.
Schiff mentions that most voters feel financially worse off.
Exactly, 63% rated the economy as poor, reflecting deep concerns.
That sounds alarming. What does it imply?
It indicates a significant disconnection between perceived wealth and reality.
What's this Trump trade he refers to?
It reflects a belief in worsening inflation, causing bond yields to rise.
How does this impact the economy at large?
It spells trouble as borrowing costs rise, capping economic growth.
Schiff warns of a potential economic crisis. What's his basis for this?
He suggests if inflation isn't controlled, we could face stagflation.
That's a grim scenario. Are we headed there?
His analysis suggests we're on a path that's worryingly familiar.
What's the overall takeaway from Schiff's commentary?
Investors should expect challenges and reevaluate their strategies.
Sounds like a call for caution.
Absolutely. The future requires careful navigation.
But that's not all. We're headed next to insights from Grant Williams on the perversion of money is the great existential risk investors now face. Are investors facing an existential crisis due to the perversion of money?
Grant Williams believes we're witnessing a seismic shift in how capital markets operate.
Let's explore his insights into this troubling trend. What does Grant see as the main issue facing investors today?
He points to the way incentives have shifted away from sustainable growth to purely maximizing short-term stock prices.
And how is inflation exacerbating this problem?
Inflation puts pressure on consumers and businesses, creating a volatile environment for investment.
So how have corporate practices changed?
Companies are increasingly focused on stock price over long-term health.
And this isn't a sustainable strategy.
No, it's leading to systemic fragility in the markets.
What should investors focus on in today's climate?
It's essential to understand the effects of inflation on their portfolios.
How can they prepare for potential shocks?
Being cautious and strategically reallocating resources is crucial.
Could we see a return to more traditional investing methods?
Grant believes there will be a necessary correction back to fundamentals.
That's a hopeful perspective for long-term investors.
Absolutely. It underscores the importance of understanding real value.
So what's the key takeaway for investors?
Always prioritize understanding intrinsic value and avoid chasing trends.
And stay tuned for future developments.
Exactly, as the landscape is shifting rapidly.
But wait, there's more. Up next, we dive into insights from Rich Checkan on dollar devaluation exposed, why only gold, Bitcoin hit real new all-time highs during last 10+ years. Is gold seeing a real comeback or just a temporary trend?
Rich Checkan believes it's a significant resurgence driven by economic instability.
What triggered such a dramatic rise?
Let's hear Rich break it down.
What's at the heart of this gold surge?
Rich points to ongoing geopolitical tensions and fiscal trends as major catalysts.
Does that mean we should expect more volatility?
Absolutely, but with potentially higher prices.
This year's gold price fluctuations are astounding.
Indeed, with a rise of nearly 28%, this volatility isn't surprising.
Is this correction a chance to buy?
Rich insists it's a healthy market dip.
How do government policies impact gold?
Rich highlights ongoing debt and spending as clear motivators for gold prices.
So fiscal irresponsibility is fueling this.
Exactly. Until there's real change, gold will rise.
What role does Bitcoin play in this landscape?
Rich believes Bitcoin is speculative, unlike gold's stable value.
Are investors divided between these assets?
Not necessarily. Rich advocates owning both.
What does Rich predict for gold prices?
He sees prices easily exceeding $3,000 next year.
That's quite a bold forecast.
Indeed, particularly given current economic sentiments.
So what's the final takeaway?
Gold remains a critical asset in an unpredictable market.
Really sounds like the market's calling for action.
Absolutely, it's time to reassess strategies in light of these insights.
What a fascinating discussion we just had.
Absolutely. Rich, Grant, Peter, and the rest brought such diverse perspectives.
I really loved how Rich Checkan painted a bullish picture for gold.
Right? But not everyone shares that same optimism.
Exactly, especially with Peter Schiff sounding those alarms about stagflation.
And there's also Grant urging investors to rethink their strategies. Isn't it refreshing?
Definitely. Yet everyone seems to agree on the need for caution.
True. It's so important in today's volatile climate.
If you found these insights valuable, make sure to like this video.
And don't forget to subscribe for more fresh content and analysis.
Thanks for joining us. We'll see you in our next deep dive.
And feel free to check out our other videos full of financial insights.